Welcome to Swing Trading Entries. This is Ken Calhoun, your host, coming at you live straight out of Colorado in the USA. Great to see so many of you here. I've been looking forward to this moment all week long. We've got an exciting show for you tonight. It's go time. Our lineup includes new strategies designed to help you make more effective swing trading decisions in today's choppy markets. We have to be a little more specific and a little more sophisticated about how to get in entries that actually work out. So we're going to be looking at that tonight. This is a preview for the main swing trading entries course. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold. By watching this, you agree not to make actual trades. It's all for information use only. You may have seen me all over the place: the Market Watch, the Money Show, Street.com, Stocks and Commodities, Active Trader Magazine, UCLA grad, founder of many different sites, and I prove I trade. It's great to see the popularity of everything that we've been trying to accomplish here with you, and I wanted to thank you all for being here. Really excited about some of the strategies you'll be learning about tonight. You may have seen me as a featured paid speaker a couple weeks ago at the Traders Expo in New York, or live at Caesars Palace in Las Vegas last November. Had your standing room crowd of 94 people for that one. Or you may have seen me in last November's Stocks and Commodities magazine, or Active Trader, or equities.com, or seen me live at some of my Las Vegas TradeMastery.com webinar or live seminar events. So always great to see standing room only crowds and standing ovations. I really appreciate the enthusiasm and the enthusiastic loyalty and the trust from so many of you from around the world. So let's get on with it. Swing trading entries. What's new and different? Well, let me tell you, here's what it's all about. Here's some of the topics we're going to be looking at in the main event, and we're going to touch on what those are all about in tonight's special preview event as well. The main point is our S&P has been, as of right now in April, the market's been relatively choppy. So this is probably best defined as how to set your entries for stock and ETF swing trades in non-trending markets, which we have now. It really, in a rally market like last year, you can pretty much throw darts at anything going up and make winning trades. Relatively easy. What separates out the very best professional and most best profitable traders, at least in my experience, from those who don't make it are those who can trade despite choppy market conditions. That's really kind of the test that puts the difference between effective traders and others, to the test. The S&P has been relatively choppy. If you look at let me show you what I mean. S&P this year has been relatively choppy, especially March and April. So how do you trade in that type of market context? And one of the answers comes in trading some of the very better breakout trades that have much stronger relative underlying strength. And how do you define where to get in? Do I buy 16.8? Do I wait for it to get over 17? Do I be really conservative and wait for 17.50? Question mark. That's the struggle. The problem is how to get in on things that actually work out and don't, for example, have, say, a false breakout. You may have been in a trade where, for example, U.S. Steel, at the time it was going up and you bought it because, yeah, it broke to new highs. But oops, it went down and your trade is going against you. And it's kind of the bane of traders, right, is to, it looked good at the time, but now it's in the muck. And either you take a stop or it's about to take a stop and you're worried about how to do that. Well, prevention is the best cure. And one of the things that I like to teach you is how to set entries designed to avoid false breakouts. What are some of the warning signs that would kept me out of this trade compared to get me in on something like this? Quick example in this one is the visual choppiness of the earlier uptrend. So although it did do a cut breakout on a continuation, what's another? Who can tell me? I'm curious. There's so many of you here, hundreds of you registered tonight. What's another warning sign that would have told you this may not have been a good entry for a swing trade? Anything else jump out? I would say the volume, though higher, was not significantly higher relative to the price. The price action was so high and so strong, the volume was only modestly stronger. It wasn't big skyrocketing volume accompanying price. So it was a divergence of only slightly, maybe 10% higher volume, but a 20 or 30% higher price action. So that's kind of a first clue that jumps out to you, or jumps out to me at least as a professional trader. One is the earlier choppiness of the chart Another is divergence of volume to, they're all excited, but not many of them getting all excited. So that's one of the strategies, or the types of strategies I cover in swing trading entries, is how to define not only the chart patterns, but the main thing is how to set your exact entry trigger. For example, SU, I believe that's Suncor, moving up, do we go in at 33.40? Do we wait for 33.70? Do we wait for over 34? Where exactly do you get in? And that's what swing trading entries is designed to teach you in depth, with a lot of different examples and very good professional entry strategies. I would be very comfortable running this past any of my institutional clients or Wall Street market makers or specialists and say, yeah, the guy's got it right, good price action entry trade set up. And so that's what we're going to be covering. This is the main agenda of what we'll be looking at. First up, I want you to learn where to enter, what signals to use. Trading, if you've ever struggled as a swing trader, and it can be brutal out there, right? Unfreaking believable. You try and get in these trades, and they always seem to go against you, and then you've got to either humbly tell your wife or husband or chihuahua or whatever floats your boat, whoever you're with, why did you lose, $600 on that trade, or why are you down hundreds of dollars? You could have spent that on something else, you moron. And it's very frustrating to have to explain to family members why you make losing trades. Am I right? I know heads always nod when I give my Money Show live presentations in front of hundreds of traders over the years. And one of the things that you need to get your hands on, or need to get a clear understanding of, is professional signals that are different from amateur signals or things that the vendors who don't actually trade will pitch to you with some magic silver bullet indicator software program that doesn't work. You need to use good price action signals. And what I'll be teaching you in swing trading entries is the signals to use, and even more importantly, the main thing is step-by-step entries. And that's the main focus of what you'll be learning about in the main event coming up in a week from tonight, swing trading entries. What are some of the very step-by-step patterns to use, and beyond the patterns, how do you determine whether to get in at, say, 30 cents above a high, or 50 cents, or 70 cents, or $1.50? Where do you avoid a chart altogether to avoid a false breakout? And how do you capitalize on those that are even stronger? So very step-by-step entry setting methodology is the main thing, the main focal point of the upcoming premium course. Also price action swing trading. You're going to build on top of or add to my earlier swing trading training to look at advanced price action strategies that are especially useful for today's markets. All of my training, 100% of my training, is always using today's charts. I always work off my actual trading workstation. I'm a real working trader, so all of the content is not some cherry-picked PowerPoint slides from 200 eons ago, back when dinosaurs roamed the earth like my competitors use. We work off of live market charts, and we look at which of the trading signals and entry prices make the most sense given the current market conditions. So not only will you get specific triggers to paper trade and test, but you'll also, more importantly, learn the underlying strategies designed to help you get in and set your own entries every single time you swing trade. I expect this to be a bestseller, and this will be one of my top-selling courses ever because of the value that it provides. It's a bargain price, and you'll be learning price action entry and exit strategies. Equally important, or almost equally important, is avoiding danger charts and stops. You can't avoid stops. How to avoid danger charts and keep really tiny small stops. I just couldn't fit that all on the PowerPoint slide here. But how do you avoid danger charts that are likely to lead to stops? And how do you manage your trailing stops and your entries a little more professionally as you're looking for your swing trading entries in today's markets? You'll also learn, as part of step-by-step entries, we're going to go through setting entries, and beyond that, we're going to be looking at how to set initial stops and also your exit targets. For example, a really effective strategy that I've used for many, many, many years is to use roughly 50% of the 15-day chart as an extension exit target. But there's many exceptions to the rule, or many situations in which you can go for an even aggressive, bigger win. And I want to teach you what those are. So a good free content tip for tonight that makes it worth your while to tune in is, on a 15-day chart, use half of the 15-day price action and a price extension, as my colleague Peter Bain would call it too, a price extension pattern. roughly half of it. So that's, say, 4 points. So if I get in over new highs here, I'm going to have a 4-point exit target. But there's more to it than that. If you have, for example, an especially strong chart, there's going to be a different inflection point or a different exit target, and I will teach you exactly how to set that target as well as your initial stop, your trailing stop, and position sizing, as my colleague Dr. Van Tharp would call, or scaling in. How do you scale in? A general rule of thumb that I will give away that I've published widely on is every 2 points for stocks priced and ETFs priced between $20 and $70 a share, which is what I specialize in. I'm one of the world's foremost authorities in breakout trades, especially swing trades, as well as the intraday trades, but been focusing a lot on swing trading the last 4 or 5 years because that's been very good lucrative opportunities given the strength of the market. And so one of the things that at least I like to do in my own trades is teach traders how I set my own entries, my stops, my targets, and second and third entries to scale in to winning trades once they continue to move. And of course, no discussion would be complete without looking at specific trade management strategies. We're going to be looking at risk management and how to trail stops, I think, is one of the things that traders get into trouble with. I manually trail stops. I do not set automatic trail stops. I like to manually trail the stop based on the strength of the chart pattern. So if I'm in, for example, in Suncor because we had a minor gap continuation, which is my single favorite chart pattern, by the way, minor gaps tend to continue the vast majority of the time in trend. Where do you trail a stop? And it's not going to be an automatic stop. You want to be able to do a good professional entry for that as well. Oh, thanks, Mike. I appreciate that. And right, no big candle from Doug and a red candle from someone else. Yeah, thanks. The point from the earlier trouble chart with U.S. Steel. Also, if you look at the daily chart, what would be a caution sign? Well, it's trying to climb its way back over major moving average lines. Always a time-honored approach, but if the context of the chart is it's been going sideways the last 3 months, I'm going to be skeptical about the breakout and instead assume it's going to be a fake out as it was today, right? Because of the lack of underlying strength or lack of strength of trend compared to a much stronger, say, a swing or even a position trade. My favorite stock in the world is Disney, right? And the reason I like Disney is because, well, it went from 40 to 110. Anyway, you always want to be able to look at the very strongest relative strength charts. All's well in the Magic Kingdom as it continues to do well based on very astute business decisions and branding and all the rest of what Disney does so well. Well, one of the things you want to look at in your swing trading charts, and by swing trading I mean trading instruments, say, like these for up to a couple of weeks, right? Maybe a week or two in duration, up to 3 weeks, is look for the relative strength patterns and how to set your entries up here. So the main focal point of the premium swing trading entries course, which is coming up next week, is to teach you how to not only identify these type of charts, but the main focus is how to set the exact triggers. Kind of like putting a microscope or a magnifying glass on some of my earlier training, for example, Swing Trading Success or Stock Trading Success System, or many of the other courses that I've developed or co-developed over the years. This is designed to help you identify exactly where to put in the trigger point. Again, you can't trade like it's an Excel spreadsheet. You need to use some, and that's what separates out too, also, you know, less successful from more successful traders, is being able to put things in context. So for example, this is a pattern I've published on widely in Stocks and Commodities magazine, in Active Trader, in my Money Show appearances, and in my Breakout Mastery ongoing webinar series course called an acceleration ramp, where you've got a slight move up and an acceleration that moves even sharper. That's a good pattern to memorize for trades. But then you're left wondering, you know, where do I buy? I mean, yeah, you can always use the standard, you know, 30 to 50 cents above the high, but I would be a little more cautious, for example, in this chart because of how long the congestion trough was here before it did a recent breakout. That's not as strong, for example, as the Cabot oil chart, which has been in pretty much a strong uptrend continuation the last 3 weeks. So that one would merit a tighter entry, whereas something like Suncor, because of congestion, would not. Or something like, for example, QUNR, I would be even more cautious on the entry because of all the selling pressure we had here, right? So yes, it's in a nice uptrend. If you kind of connect the dots, it's a nice strong uptrend continuation. But because of this suspicious selling here, that's going to put the fear of being on the wrong side of a long. Just think like any good institutional trader. Any of my institutional guys will tell you, the clients, I've got professional market makers and whatnot that come to my live Vegas seminars when I do those on occasion, and you'll hear the same kinds of things from professional traders that you don't hear from amateurs or those amateur educators that pretend to trade but they aren't, which is most of my competitors. What you'll hear is things like, what are scare factors? Okay, where are pullback factors that lead you to not want to be all excited about trading up here because of this dent in its history? Kind of like doing a reference check for an employee. If you are in a corporate environment or a small business owner, you're trying to hire somebody and you check references and one of the references comes out bad, you're probably not going to hire that person, right? Well, same thing here. You're looking for the character, the integrity, the strength, the buying pressure, and the profitability of that chart. Now, still a good up chart, but we would countermeasure what I call kind of a safety trading shield approach by using a larger area or wider, what I call a false breakout filter, as I published in Active Trader magazine over, I guess, a dozen or 15 years ago. A safety buffer that's going to be wider because of the precedent selling pressure that we had. I used to be a corporate statistician and quality engineer, and one of the things I found that helps me be very good at my trades is I'm very good at correlations of, if-then thinking. If there's a major pullback, then I'm going to use a larger entry trigger above the high than I would if it were just a nice straight uptrend continuation. Like one of my traders, America, thanks America if you're out there, and mentioned this one in our live room. This is a nice uptrend continuation for a relatively cheap chart. So yeah, we want to go in long somewhere over 17, but where? And that's the focal point of what you'll be learning about in the swing trading entries main course. Now, having said that, I can't promise that what I teach you will put you in a mansion with the yacht in the front, or a mansion with the yacht in the back and a fancy car in the front, or a nice swimming pool and big mansion, and you're not going to get the pool party with the hot models, and you're not going to get the private jet. I can't promise all that, but BB, I don't want you to be that loser trader who's out there constantly beating your head up against the wall, because it's brutal. It's one of the things that it's frustrating. I got to be honest with you. It's the worst losing trades because it seems like if you're in a losing slump, no matter what you do, it seems like the market has it in for you. Quick joke. How many swing traders does it take to screw in a light bulb? The answer is none, because you folks are the ones getting screwed. Not your fault. It's because of the markets or your broker or the phony educators who pretend to trade but can't prove it. It's brutal. Don't be that guy or that lady who continually beats your head against the wall and doesn't do well. Now, in swing trading entries, we're going to focus on 3 core strategy areas. The first being what I call easy entries. Time and time again, you folks have told me, my advanced training, is something that takes a bit of wrapping your head around. It's a little difficult. So what I want to focus on in swing trading entries is keeping it simple and very straightforward and clear and well explained, so you can do it on your own without me having to be there for you. So you can set your entries for your swing trades for the very best charts independently of me. A good teacher, a good mentor, a good coach is measured by the success of their students, and you can see all the legion of testimonials and video testimonials across my sites, and I thank all of you for posting those. It means a lot to me. It tells me that I'm doing the right thing. I'm headed in the right direction, and I appreciate your trust. But even more importantly is to do it on your terms in a way that makes sense for you personally, that capitalizes on your strengths and fits your lifestyle and your time available to trade. So I want to keep this as easy and straightforward and simple as possible while still having the potential to do very well for you in terms of setting entries that work out. So I want to do a very conscientious, very responsible, very authentic, honest job of walking you through how to set entries for your stock and ETF swing trades. This is not for Forex, this is not for E-minis, this is mostly for stocks and secondarily for ETFs and ETNs priced between $20 and $70 a share with good range and good volatility. That's the core of what I've been trading for 20 years, and it's something I want you to consider looking at as well. A second area is what I call safety trading shields, and these are things that are designed to shield you from false breakouts, like the U.S. Steel chart. Where can you set your entries that are likely to keep going and aren't going to stall out and stop out as soon as you get in? Because we've all been there. I've done that. My biggest struggle as a trader back in the 90s was I was always jumping on everything that moved. Kind of like, I won't talk about my dating days and chasing women, but kind of same thing. Same thing, different channel. Jump on anything that moves. One learns to be a little wiser as one gets older, and you get burned in both situations, and you get a little more cautious, kind of like the once bitten, twice shy, or burn your hand on the stove. You're cautious around a hot stove. What I want to teach you in swing trading entries are some of the trading shields, the things that are designed to keep you out of choppy charts and in on the strongest charts, and take it a step further by teaching you exactly how to set the entry price. What price makes sense for this chart given what you see in its previous trend and the current volume and the current breakout pattern. And the third core strategy, kind of a best practices focal point for us, is what I call trade timing. One of the biggest things that it took me so many years and so many thousands of trades and so many millions of dollars worth of stocks and ETFs traded to learn to get right is that good trades, and I always mention this, and you've probably heard me say it a lot of times for those who've been with me the last decade plus, but good trades feel like they're a little late to get in and a little early to exit. And so I want to teach you how to lock in profits on trades before the market takes it back. For example, whenever I do my live events, I always, throw up some examples of real trades I'm in. And let's say, this is one from earlier, but let's say you're in a swing trade, quick interactive audience participation point coming up here right now. Yay! Yay! Turn the volume down. Yay! If you're in this trade and you're up $600 in a swing trade on a couple hundred shares, okay, so a couple hundred shares, I was up $600. How far would you let this go against you before you locked in a profit? And again, only learn from people like myself who prove that we're actual real traders. This is a Real Money IB account, right? This is from a few years back. I hear you guys, I need to put more recent trade examples out there for you. There's still a lot of illustrative value here. If you're in the money $600, how far will you let it go against you before you say, hey, I want to take my money. I want to have something to brag to my wife and kids about. Hey, honey, guess how much I made in my recent Zales trade? Okay? Or I'm sorry, ZSL trade, not sales. Anyway, ZSL, how much would you take? And a good trader would close out the trade sooner rather than later. For example, if I'm up $602 in that trade, there's no way I'm going to let it go against me further than fill in the blank. What do you think I would say? Profit taking and trade timing as part of that is absolutely vital. Now, I'm not making any promises that you'll be able to trade like I do. I've been doing this for a lot of years. But I can promise I'll teach you the best of what I've learned. And hopefully you can do well on your own, having been given the nudge and the techniques and the things that a professional does. Anyway, yeah, I would let it know. Michael's saying never get back 50%, 50%, 1 or 2 points. No, epic fail. Those are all wrong. If I'm in the money, at least saying 300 to 400, no. If it's $600 in the money, I'm not going to, no way in heck am I going to let that trade go less than $550 net P&L. Because I want to take my $550, wham, bam, thank you, ma'am, and be done with the trade and lock in a profit. There's no way I'd let a $600 open profit turn to a $300 open profit. That's the realm of a failed trader. As Darth Vader might say, the ignorance is strong with this one. You don't want to do that. You want to take money. Be in the habit of taking profits early and often. Now, if I'm only up $25 in the trade, I'm going to let it dink around for a while and hopefully get some wings, and then my buy stop orders will scale me up on continuation plays. But if I'm up $600 in the trade, I'm not going to let it go back down to $300. Why would I do that? You're in the business, it may be a foreign concept, but you're in the business of trying to take money. Be a very profit-taking, like Han Solo said in A New Hope, for those of you who are fellow Star Wars fans, I'm in it for the money. I'm not in it for the princess. I expect to get paid. If gold is all you want, then that's what you'll receive. Well, how much can you imagine? I can imagine quite a bit. Well, I know the whole movie by heart. Anyway, the point is, if I'm up $600 in a swing trade, I'm not going to let it go down to 400 or 300 or 200. Why in the world would I do that? It took me hard enough work to get the 600 bucks out of it. I want to take the money and run. I can always rebuy new highs. That's why I put in buy stop limit orders to scale up if it keeps running in my favor. Anyway, so the goal is profit taking, and do bigger profit taking as an objective rather than smaller profit taking. So one of the things that I think can really help you as a trader is to figure out those types of strategies. If we look at our charts, the S&P is doing kind of a minor grind up, an ascending triangle if you want to. For the fellow fans of candlestick trading, and again, only learn candlesticks from Steve Nissen, because he's the only guy who knows this stuff. Everyone else copied Steve. Anyway, it's hammer time down at the lows, kind of tweezer bottom hammer, so buying above the hammer high would make sense. I don't buy pivots, but there it is. It's a good pivot signal. It just popped out to me as a fellow trader, somebody who learned from Steve. Well, anyway, ascending triangle, okay, that's nice, but these charts are better, right, like SU or HZNP. What are good about these charts? Now this is what I call an acceleration ramp. Steady uptrend followed kind of like a hockey stick by a sharper angle uptrend. But where do you buy? And that's what swing trading entries is designed to teach you. Do you buy at 31.50? Do you wait to 32? Do you get in at the very first sign of a new move? And why? The answer is found in the clues of not only price action and the relative strength of the previous antecedent chart pattern, but also in volume. And we're looking at where does it make sense to get into a trade, to gradate into a trade based on the relative strength of the pattern. And so developing a trading plan that helps you specifically, with a great degree of confidence, know exactly where to get in your swing trades from now on based on what you see in the chart pattern is the goal of the swing trading entries course. So that's what I'm after in this, is to extend my earlier training in which we looked at those patterns. Yeah, from Mom, it said I'll lock 80%. That's a good answer. Mom is right, 80%. So if you're up 600 bucks, it's at least 480 bucks, 500 bucks, something like that. You want to lock in at least 80% minimum of your trade, but don't let it go back down to half. There's nothing more frustrating, because I've been there and done that. I've made every mistake known to man when it comes to trading, but yet I survived, and now I do good. If you got into a trade up here, let's say you bought the breakout. Let's say you bought the breakout on the first sign of a breakout, and it's in the money, yeah, say $300-400 bucks. You don't put the stop back down at the even and say, well, ho-hum, maybe it'll keep running up. I got to give it wiggle room. That's the words of an amateur. Professional traders, maybe I'll sell half of it on a loss of $32.40. I'll sell the rest of it if it bounces back at my break even, but I'm going to lock in an early profit. Or as one talk show host on financial news TV, Booyah guy would say, take some off the top. And that's what you want to do. When something's in the money for you, I want you to start getting the habit of taking early profits. And how do you set an entry trigger that's likely to continue once you get in one of these nice strong breakout charts that has a reasonably strong pattern? Some of these are better patterns than others. For example, Range Resources is better than WMB because of the chop. It's still an up chart, but this one I would not trade at all. Put a big X in that chart. A new trader might be all tempted to buy in at, say, 52.50 or 53. I wouldn't touch this one with a 10-foot pole. And the reason, I would just say no, because it's choppy. And although we do have a minor gap continuation, so that's my favorite pattern, there's better fish to fry. There's better, cleaner, wider chart patterns. And so developing a trading strategy that helps you enter the trades correctly on the strongest of the breakout continuation plays really helps make sense. So you avoid, say, false breakouts that chop down. Or moves up, hey, you got in, but then it pulled back. Okay, what are some of the differences in those types of charts that really make sense? And as you're looking at, say, the 90-day charts, we'll go through both of the charts for you. You know, one of my chart patterns that I have published for years that I've since been copied on is a wide range candle at the right side of a cup. I published that in the November Stocks and Commodities magazine, Technical Analysis of Stocks and Commodities. And anyway, that's one of my favorite breakout patterns. As you're looking for those types of strategies, you want to put it in context. This is an even better chart because the wide range candle at the right side of a 90-day chart. It's gone from 18 to 30. It's about doubled. Well, actually, it's gone from a low of 16 to 31. So it's almost doubled. We have bullish lower shadow, a hammer here, and it did keep running on up. A nice window or minor gap continuation led to additional buying pressure of another 5 points in HZNP. Now how do you develop a trading plan that's going to keep you in on continuations and stay out of false breakouts for charts like this? Okay. So thank you for being here. If you wish to join me in a week where we will go over the strategies of how to do that and the exact entry patterns, I urge you to go ahead and register for swing trading entries. It's not open yet. Let me see if I can update that for you. I will have the tickets on sale, right? I'm updating this in my merchant account. Okay, it should be open now. So if you register, hopefully this will work now. Yeah, you can get in. It's just $97 for a full hour and a half. I'm a real trader, so you can learn from me. I'll update the page in a minute. I'll put a replay of the video of tonight on the site too, maybe right below this one, right under the headline here. So you got a replay of the webinar tonight. But basically, we go over all these different strategies that I covered for you earlier, and that's coming up Thursday, April 23rd, just 1 week from tonight. And I will be recording it and giving you individual access to a members area that'll have a high-resolution, high-definition video. So tickets are actually on sale right now, so feel free to go ahead and register. There's no upsell, no monthly fees, nothing like that. It's just a one-time bargain priced at just $97. I usually charge more, but I thought I'd make it a bargain, so especially good for those of you who are maybe new to working with me, or those of you who've been with me for a long time and you want to get advanced strategies on price action entry setting for stock swing trades. This is a really good opportunity to do that. And I'll be giving you a very good hour and a half long, a very step-by-step, easily followed, very kind of a template blueprint approach where you can look at exactly the chart patterns, and beyond that, how to set your entries for those charts. And it'll be different. It's not just a blanket 30 to 50 cents above highs. We have different strategies based on the relative strength, the relative underlying strength of that chart. And that's a good professional approach. The stronger the chart, the tighter the entry. And you need to understand the difference by looking over my shoulder as we go through the different patterns together as a team in swing trading entries. So I wanted to thank all of you for being here. Big turnout, too. I had hundreds of you register for tonight. You have my word. This is good, honest, professional training. I'm a money show speaker and genuine industry expert. I'm not some Johnny-come-lately like all these competitors who are more internet marketers than actual traders. You may have seen me everywhere. You know, I'm one of the, hopefully, like so many thousands of others, you'll find me one of the good guys who actually very conscientious and responsible and authentic with a great degree of integrity and step-by-step specific pattern skills that can help you identify your entries. You can see why so many people like my training. I very much appreciate, deeply, sincerely appreciate all of you who have worked with me over the years. It's been a real heck of a ride, and it's really neat to see standing room only crowds and standing ovations at the Money Show Expos and all the rest of it. So go ahead and join Swing Trading Entries, and I will see you in the event coming up next week.